Well, as we all know, tax burden is certainly not fun for anyone involved, which is why Art Lambie, partner with the Rhode Island CPA firm DeSanto Priest & Company, is here with some helpful advice this morning. Good morning, Art.
Good morning, Brendan.
Great to have you here.
Thank you.
You know, this topic certainly is one that we all have to deal with at some point in our lives, you know, with regard to taxes, laws, what we owe, what we don't owe, what is taxable, what's not taxable. So there's just so many things for us to cover. But you really, in your many years of doing this, you've seen so many changes. And now that we're in this, you know, 21st century, you know, this digital age, things like Bitcoin are now here, you know, old school methods versus new school. So, I mean, kind of guide us here at the beginning with what we need to know as to some of those changes.
I mean, last year, taxpayers saw the biggest amount of tax changes in decades. This year, not so much. The forms are going to change a little bit this year. They're going to look a little bit more like the 2017 forms, which I think a lot of people are going to appreciate. But the big thing is there's going to be a new question on the forms, one that's going to ask taxpayers whether or not they've transacted in virtual currency. And this is known basically as the primary cryptocurrency, which is Bitcoin.
Right.
So the IRS is cracking down on taxpayers who transact with Bitcoin because they've found that there are a lot of transactions and a lot of sales of Bitcoin. People are making some money with Bitcoin and not reporting these transactions on their tax returns. And unlike regular currency, I know the word cryptocurrency says currency in the name, but really the IRS looks at Bitcoin as a piece of property, like a stock, a piece of land, or a building.
Absolutely, and it's so important that we differentiate between these, you know, different things, of course, as we, you know, forge ahead into the future. So let's talk in terms of planning. People out there watching what they're doing, their plan of attack. What are some ideas we should be mindful of?
Sure. This time of year is always a good time to take a look at how much you're contributing to your 401k, your IRAs, your 403bs, all your retirement plans. You want to max out the contributions to those plans, particularly if you're expecting a bonus or a pay raise, or if you've inherited some money during the year. Maybe find a way to put more into the 401ks and supplement your take-home pay with some of those other resources.
And that's something that we can all be extra mindful of, especially at this time of year as we ease towards the end of the calendar year, correct?
Yeah, absolutely. And it's also a good time to talk with your investment advisor. Talk with your investment advisors about maybe selling some stocks or mutual funds that have some losses built in. Sell those securities, realize the losses, use those losses to offset some gains. It's also a good time to talk with your investment advisor about possibly selling stocks and mutual funds with gains, especially if you're a married couple with income of less than $100,000. You can sell these stocks and mutual funds and in many cases pay zero income tax on those gains.
These are all very important strategies and things that maybe people heretofore have not been cognizant of, so it's important that we break them all down, isn't it? And ask those questions. That's okay, isn't it, Art?
Sure is, sure is. And, you know, one thing in closing for our viewers, if they're ever telephoned by someone representing themselves to be from the Internal Revenue Service, usually the IRS will never call you first. You'll hear from the IRS in writing first. Right. So be very cautious about giving your personal information over the telephone.
Something to be aware of. Thank you so much. Great to have you with us this morning. If you guys would like to review any of this important information, we'll have it all posted. We'll have links, rhodeshow.com.